Let's do one thing. Let's talk about Dr. Reddy's. Pharma major Dr. Reddy's fourth quarter earnings missed street expectations. The India business has come in line, while it was a big miss for the Russia business. To discuss more on the company's performance, we have Erez Israeli, who's the Chief Executive Officer of Dr. Reddy's. Mr. Israeli, thank you for joining us on the channel. The US business declined quarter on quarter at $391 million. What led to this decline? Is it price pressure? Is it lesser sales from key products? And what is the way forward?
Nothing special. This is just a timing of orders and supply. The US stay consistent like in the quarters before, or with all the levers, meaning the base business with more market share, new products, and lenalidomide. So we see that as a consistent quarter also in the US.
Well, specifically, how much did Revlimid generic contribute to the US sales in the past quarter? I wanted to understand whether it was lower than the last quarter, and how much did the main portfolio contribute as well?
You know, we are not sharing this kind of information, but it's obviously still a meaningful product for us and likely to stay that way also in the coming quarters. The main portfolio grew as well, so we added it. Most of those brands were launched in the US as well. So if you wish, it's the main, the normal additional market share based portfolio and lenalidomide. All three of them contributed to the growth.
Right. What is your guidance based on the contribution from Revlimid generic and other portfolio drugs such as Suboxone, Kuvan, and Vescepa? And could you just sort of talk to us about how you're accounting for the price pressure here?
We are expecting to grow in the United States in FY25. Lenalidomide will continue to be meaningful. In addition to that, we have a healthy pipeline that we are planning to launch through the year, and as well as we believe that the fill rate of the orders that we are is going up. So during FY25, we will have actually 4 levers of growth: the base products, the main products, lenalidomide, and the new products.
So the margins were lower than estimates at 26%. What were the cost pressures like in this quarter?
First of all, they are not lower than what we get because we did not guide. In general, this quarter we had more expenses on R&D. Some of it is what we call seasonality. We have quite a few submissions in the end of the quarter. In addition to that, we are involved in several business development, and we have certain expenses behind them, plus licensing fee of some products. So overall, this was impacted our expenses primarily. At the same time, we feel that the growth that will come from that will basically compensate for any of those expenses that we are doing now.
Well, your previous guidance has been 25%. Is that intact?
We believe that the 25% EBITDA give us a great sweet spot between how much we want to invest for the future and how much we want to give back to the shareholders. This is still relevant, also will be relevant in the future. We will have quarters in which we will be above these numbers. We will have also quarters that we will be below these numbers. But as a kind of guidance of where we would like to be and where we believe the right capital allocation is for us, this is a good place to be for us.
You know, India growth on an adjusted basis was 11%. Could you tell us if this growth will sustain into the new financial year, FY25?
I believe so. We see double-digit growth, and likely that it will stay that way also in FY25 and beyond.
So the company recently formed a joint venture with Nestle, right, for nutraceuticals. The Nestle management also indicated that the potential revenue from this is around 1,500 crores in the next 2 years. What is the potential that you would enjoy from this JV?
Yes, so we naturally have the same set of numbers as it's a joint venture. We are very excited about the opportunity to collaborate with Nestle. Nestle has a very, very rich pipeline of products that currently is not registered in India. So on top of the fact that both partners put their products into the JV, there is a very, very big potential for bringing the products that are clinically proved to India. And in addition to that, it's opening an additional opportunity to collaborate with Nestle. We are very excited about this opportunity.
Well, I have to ask you this, sir. Novartis is still considering its options in its Indian listed arm. Dr. Reddy's, well, you all had denied all these reports with regard to the acquisition. Could you comment on it? Could you give us a quick update out there?
So we cannot comment on speculations on deal. In general, what we can say that the Indian market is very important for us, and any collaboration with any partner that makes sense, we would love to engage in.
So just to push that point a little bit further, the cash on books for you is around 6,400 crores. Any utilization plans, especially, as my colleague put it, via M&A?
The cash utilization will be primarily for business development, both mergers and acquisitions, licensing in and collaboration as such. Once the relevant deals will happen, we will use this cash primarily for that. In addition to that, we are using the cash to finance additional working capital, primarily inventory, in order to give better service in the United States. So first for business development, as well as to give a good service, given the disruption in supply chain around the world.
Okay, that is Dr. Reddy's. But thank you so much for joining us, and have a great day. Thanks for speaking to CNBC TV 18.